In this video, I am going to do the technical analysis of S&P 500 index for the week commencing from October 18th, 2021. So this technical analysis will be in two parts. Okay, first I will do it on the weekly chart and then I will do it on the daily chart. So this way we will be able to get the most accurate results as we are getting for last couple of weeks, couple of months. Okay, so I will start with the weekly technical analysis. So this is the weekly chart. Okay, and these are the weekly candles, not hourly, not daily candles, but these are the weekly candles. If you look into this, the last candle, okay, so this is a bullish candle. This is a bullish candle. Okay, and you can think of this candle, okay, like a hammer. This is means it is not actually a hammer, but you can think of it like a hammer, but it is a bullish candle. So the interpretation of this candle is, because it's a bullish candle, it has formed, okay, above the moving average, above the support. It is and it has a very wide body, which means the next candle that is going to form, okay, it will be means it will or sorry, it may be bullish in nature. Okay, or if it comes down, then this fall, okay, it may be limited to this support or these the moving averages. Okay, but anyways, the market will try to retain this position, okay, in the coming week. So this is the interpretation of this candle. This will be more clear on the daily charts, okay, and particularly we will have to look into the gap up or the gap down openings. Okay, and okay, so one more thing that is interesting here, okay, that I would like to club with the technical indicators, okay, particularly with the moving averages, that that the candle, okay, these the last two candles, okay, they were closed above the median of the Bollinger Band, means above the SMA of the Bollinger Band in the bullish direction. So this is again depicting a bull trend in the market. Okay, it may be a short term bull trend, but it is depicting a bull trend in the market. Then we are okay, then we are seeing this a kind of slip in the moving averages. So it will be more clear in the coming week. If there is a crossover, then it will be healthy for the market, and if it will be a slip, then the market will move up. Okay, so it will be more clear in the next week. So let's do the technical analysis. So okay, so first we are doing it on the weekly chart. First comes the moving averages. So if you see that the moving averages after 1 year, okay, market came below the moving averages and then there was a rebound, but at least it came below the moving averages after 1 year. Then it found a good support here at 4290. Okay, and then there was a rebound. So and market is still market is still above the moving averages for these last 3 sessions. Even after when this candle was formed for the week of September 27th. Okay, the market was able to sustain and close above the moving averages. So moving averages are supporting a bull trend. This is what moving averages are supporting. Now the Bollinger Band, because the candles on the weekly chart, candles they have closed above the SMA of the Bollinger Band and above this support. So it is again supporting a bull trend. And by default, okay, this the Ichimoku cloud is supporting the bull trend. So these are supporting the bull trend. Okay, so let me tell you the support and resistances here. Support and resistance have not changed for last couple of weeks, for last couple of months. So we have a very good resistance at 4525, 4525. Okay, this is very good resistance. And then we have a very good support at 4396 or 4395, you can say. 4395. Okay, this is very good support at 4395. Then we have another which is very heavy support at 4290. 4290. So these are the support and resistances for S&P 500 index. And once again, okay, I would like to remind you that when I say support and resistances, so support and resistances are not just, like one price or one point. It is actually a zone. Okay, so a zone. So in case of S&P, okay, this zone is plus minus 25. So if I say 4,525, so this zone is 4,500 to 4,550. Okay, so market may fluctuate in this zone. Once it crosses either side of the zone, okay, then the trend will be clear, and then only, okay, you can enter into the market. Now, if I talk about some other technical indicators on the weekly chart, so some other technical indicators. Okay, so we have stock RSI now. This is interesting. Stock RSI means moving averages are supporting the bull trend. Okay, Ichimoku and Bollinger. Okay, all are supporting the bull trend. But stock RSI is still bearish. Means it is in the bearish zone or bearish territory. Okay, because the K channel is only 15, less than 25, and D channel is 10. Okay, so we cannot say that that it is marginally bullish or marginally up. No, because it is below 25, so it is bearish. Okay, so this will be more clear on means in the coming week. And okay, so there is going to be an interesting thing, that if in the coming week, if the market forms a candle, or if it closes here, okay, or below this point, then this will remain bearish, and then the coming weeks, 2 3 4 weeks, okay, market will eventually come down because of this thing. And if we talk about the MACD, MACD is heavily bearish. It is not bearish, but it is heavily bearish. So both stock RSI and MACD are bearish, and they are supporting each other, which means that the market is still bearish through these technical indicators. If I talk about the momentum, there is very heavy momentum that is supporting the bears. Okay, approximately 80, and this momentum is supporting the bears. So the stock RSI and MACD and the momentum, okay, they will try to pull back the market. So in this case, what we can assume, that this high that was created by the market, the S&P 500, okay, this may be what we say a lower high. Okay, and what we do on lower highs, we sell on lower highs. Okay, so this thing will be more clear on Monday and Tuesday. Okay, and if on Monday and Tuesday, if the market comes down, okay, and if the candle is a red one, a bearish one, okay, then chances are that market may come down, okay, in later in the week. Okay, because in that case it will be considered as the lower high. Okay, now, so considering all of the technical indicators on the weekly chart, okay, this is the weekly chart. So we are about to discuss the daily chart. So on the weekly chart, okay, these indicators are saying up, and the other indicators are saying down. So it is not clear whether market is bullish or bearish. So what we can say here is that market is weak. The market is weak bullish. It is weak bullish. Not, it is not bullish. Okay, and it is moving up. So, and this way it may not look like a bearish, so we will call it as weak bullish. Now until and unless market remains below 4525 or 4530, or this particular price, okay, it will remain, means there is very high probability that market will come down. Okay, the only way market can move up is when market cross this point. Okay, 4525 or 4530, okay, or 34, then only the market may move up, otherwise market will come down. Okay, now let's move on to the daily chart. Okay, in order to validate like what is happening there, or what is most likely to happen in the coming week, and whether it is bullish or bearish. Okay, so let's move on to the daily chart. Okay guys, so we are here on the daily charts. Okay, this is the daily chart. So picture will be more clear on this, the daily chart. So we are here on this the daily chart. Okay, these are the daily candles of S&P 500 index. Okay, now if you see these the last three candles, one, two, three. Okay, so this was a bull candle. Okay, but this was below the these the moving average and the Ichimoku, so there was no trade here. Okay, so on this the October 14th, there was this very heavy candle, very heavy bull candle, and this bull candle it was formed. Okay, and the subsequent candle, these candles were formed because of the earnings. The companies, okay, they have reported the earnings, especially the banks. They have reported some good earnings, and because of that, those earnings, okay, we have seen this, very heavy bull candle here. And thereafter there was this candle. Okay, now the problem here is that as such, look, if you look into this candle, okay, this candle and this candle, they are very heavy bull candle. Okay, so the interpretation of this bull candle is that because it is bullish, so the market is supposed to move up. Okay, or the next candle is supposed to form, which is supposed to form here for 18th of October. Okay, it is supposed to be bullish, but actually it may not happen, and the reason is this the Bollinger Band, the upper band of the Bollinger Band, because market has touched the upper band of the Bollinger Band and then it stopped. It stopped. Okay, and then it came down and then it closed at 4,471. And one more thing, let me show you. Like in the last technical analysis, okay, in my last video, I told you that whenever there will be a pullback, market will hit 4,470. Okay, so if you have seen that video, let me show you that video real quick. Okay, so if you see, okay, this was a technical analysis for the last week, and I told you that if it hits 4,400, 4,410, okay, then it will try to move up, and there it will move its, upper band of the Bollinger Band. It will be 4,470. So market did exactly as predicted last week. Okay, so we are here on the chart, and this is how the market has reacted. Okay, at as mentioned in the last video. So now we were discussing this the upper band of the Ichimoku. The market hit the upper band of the Ichimoku and then it cooled down. Okay, now uh, the market, okay, it closed at the boundary of the Ichimoku, exactly at the boundary of the Ichimoku. So now we are not sure whether, okay, whether market is going to move up or not, because if, because like on Monday, if on Monday there will be a gap up opening or any opening, okay, here in the open above the Ichimoku, and if the market moves up or if market comes down but it closes above the Ichimoku, in that case chances are that market will try to move up, because now it will be above the Ichimoku. Okay, so it will try to regain its bull momentum. But if somehow, like if market opens, like with a gap up or gap down, like, okay, so for example, if there will be a gap down opening, then market will try to come down, because market has already these two gap ups. Okay, and because of these two gap ups, there are many of the, so many people, okay, they are trapped here at this point, 4,365. Okay, so there was two gap ups here in the market. So market has not respected two of the moving averages. Okay, so actually it never happens. So market is expected to come down in order to respect the moving averages. Okay, and to free the traders who were trapped here. Okay, here, who are trapped here. So market will come down and market is expected to hit, okay, this support or these the moving averages, or at least the boundary, okay, which is at 4,423. Okay, so this is what is expected to happen. But again, we need to see whether market closes above the Ichimoku or in the Ichimoku. Okay, now if I do the technical analysis here, so first I will cover the moving averages. Okay, so if you see the moving averages, so market has crossed the moving averages. Okay, it is, and on two consecutive days, okay, it has closed above the moving averages. So through moving averages on the daily chart, market is bullish. Okay, Now if I talk about the Bollinger Band, okay, so market has closed above the median of the Bollinger Band, okay, which is SMA, and then it touched the upper boundary of the Ichimoku. It is bullish, but now it is going to act as very strong resistance. Okay, so market may take a U-turn, okay, in order to cool down. Means market must cool down. Market must cool down before it further moves up. But so it must cool down and it must respect, okay, the other two moving averages. So through Bollinger Band and through the moving average, market is bullish. Now Ichimoku on the daily chart, okay, market closed at the boundary of the Ichimoku. Okay, so we are still not clear whether market is bullish through Ichimoku or not. It will be more clear, okay, in the coming days. What we need to see whether market closes above the boundary of the Ichimoku or in the Ichimoku or below. If market closes below the Ichimoku, then for sure market will come down and market will come down heavily. Okay, because in that case, this is going to act as lower high. And what we do on lower high? We sell on lower high. Okay, so it will act as lower high, means market has reversed its direction. Okay, it was coming down, it moved up, and then after forming a lower high, okay, it will come down. Okay, so we have covered the moving averages, Ichimoku and the Bollinger. Okay, now let's move on to the other technical indicators. Okay, so let me clear the screen here. So other technical indicators, we have stock RSI. Okay, so we have stock RSI. Stock RSI is bullish. Then we have MACD. MACD is also bullish. So stock RSI and MACD both are bullish and they are supporting the moving averages. Okay, momentum, yes, momentum is not there. So momentum is not supporting this bull trend. This bull trend. Okay, it is not supporting. It is not supported by the momentum. So there is no momentum here, because if you see the momentum is only 1920. So through all of the technical indicators, through all of the technical indicators, okay, on the daily chart, market is bullish. Okay, but if I consider that the weekly, okay, the weekly chart, the technical analysis on the weekly chart, okay, so the only thing, okay, that I can say here, that it is weak bullish. It is bullish, but it is weak bullish, because on the weekly chart, okay, we have seen that the stock RSI, MACD and momentum, they are supporting the bears, not the bulls. Okay, then that is the reason why I'm saying that it is weak bull, and why it could be a lower high. Why it could be a lower high? Okay, because when once the market, okay, it forms a lower high, then market comes down. So this picture will be more clear on the look, means particularly on the Monday and Tuesday. So now let's see like what may happen or what is expected to happen on Monday. Okay, so this thing is clear that it has touched the upper boundary of the Ichimoku, and now it is expected to cool down. It is expected to come down. Okay. So if there will be a gap up opening, see, if there will be a gap up opening, okay, then immediately after gap up opening, okay, it will try to come down. In order to cool down, it will try to come down. If not, then it will try to move up. Okay. And then after 1 hour, after 2 hour, it will come down. But it has to come down. Okay, and this was the gap up opening. And now if there will be a gap down opening, so that gap down opening, okay, it will trigger selling, because people, okay, they have already bought a lot. It will trigger selling, and immediately, okay, after opening the market with through a gap down, okay, market will try to come down and will try to hit these moving averages. Okay, means either immediately or 1 hour or later in the day, it will try to hit these moving averages. So you can expect like 4,400. Okay, this will be the price. Okay, 4,400. Or if I talk about this, if I see this, the confluence zone. Okay, so anything, so you can say like it may hit 4,410. If it comes down, then it may hit 4,410. Okay, and if it moves up, sorry, if if it moves up, okay, in that case we have a limit of 4525. Okay, we have a limit of 4525. Okay, uh, let me remove these lines. Okay, so this is the upper limit, this is the lower limit, 4410, and this is what is expected to happen with gap up, and this is what is expected to happen with gap down. Okay, now the only problem here will be created by the Ichimoku. Okay, so the boundary of the Ichimoku is at 4425. Okay, so 4425. So when this market comes down, this S&P 500, okay, currently it is at 4471. When it comes down, so first it will hit 4425, which is the boundary of the Chimoku. Then it may enter in this boundary to hit the confluence zone of 4410, and thereafter hitting these the moving averages, which will be around 4403, 4404. Okay, or this our this support at 4396 or 4395, then only it may take a rebound. Okay, so rebound would be possible thereafter. Okay, otherwise no. Now one more thing, this is Ichimoku. So if market close above the boundary of the Ichimoku on Monday and on Tuesday, then expect a bull movement in the market. Okay, because it will be on the bull side of the Ichimoku, and it is already supported by all other indicators. Then there will be a bull movement in the market. Okay, so these are the support and resistances, and this is how it is expected to behave. So let's see if it is a lower high. Actually, if it is a lower high, okay, or it is supporting, or it is still supporting the bull trend. Okay, so it will be more clear on Monday. Should you wish to participate in my stock market programs, then I have given the links to these programs in the description of the video. You can take a look. Okay, so my programs are on the options only. Okay, options are trading strategies and options, technical indicators, etc. And if you want to join the Discord group, okay, so I have given my email address in the description of the video. You can send me an email. Okay, and don't forget to like and subscribe. Okay guys, so this was my technical analysis for S&P 500 index for the week commencing from October 18th, 2021.